Hi there, welcome to Kneppy Invest, and welcome to 3 companies on the ASX that released interesting or intriguing Appendix 4Cs for the June quarter 2025. I am recording this video on the 3rd of August, intending to release it sometime in September and not end or October, because I won't be releasing this video twice. I do intend to release this video before the mid-October period because I want to release it before these 3 companies release their Appendix 4C for the September quarter. There's also the chance that maybe one of these companies, if not 2, get a notification from the ASX that they're no longer required to release Appendix 4Cs. That does happen quite often. Anyway, now the three companies I'll be focusing or featuring in today's video are Beforepay, EZZ Life Sciences, and also Advanced Braking Technology, a company I've been following about 12 or 13 years, maybe even longer than that, and maybe I should take a closer look at this company. In fact, I'd also say the same thing about Beforepay. I've thought the worst things about this company because they're into pay advances, and I'm not the biggest fan of pay advances, but maybe I'm being a little bit unfair on Beforepay. Okay, so what I'm going to do is briefly discuss what these companies do, if I know anything about these companies, and if I'm not, I'll just have a look at their website, and then we'll have a look at their company's Appendix 4C for the June quarter. Also have a look at their cash receipts history, and then the chart. Always end with the chart. In fact, what I'll do is I'll put Beforepay in here before I start looking at Beforepay. Okay, Beforepay. I've always thought of this company as just providing people who have no financial education. They're paid before they get it. And I do know that's sort of like a double-edged sword, because sometimes you do need cash urgently, but this can lead to a cycle where you're always in debt, always needing your pay in advance. So I think financial education would solve many of these issues, but I have a feeling that maybe Beforepay is a little bit more than that. They do pay advances because it's at the top of their web page. What else do they do? So look here, get your pay advance borrowing estimate. Not a big fan of that sort of thing. But I do have a feeling that maybe they are a little bit more than that. Typically, in a company's webpage, they will have an about section. I don't see that at all here. Maybe it's in the help section. No idea. Another thing you could do is just have a look at any sort of webpage or the announcement of company issues, because a lot of times they will have an about section. The market cap of this company is just below $100 million. And what I'll do is we'll open up their Appendix 4C and then have a look at their about section. Let's do that right now. So this company was founded in 2019, so fairly young, to support working Australians who have not been well served by the traditional financial services industry. Beforepay Groups operates 2 business lines: Beforepay, the company's direct-to-consumer lending business, so that's probably the pay advance, and Carrington Labs, which builds and deploys explainable AI-powered loan portfolio recommendations and lending solutions. Apparently, the company has won several awards, including APAC Inside Australia Enterprise Awards 2024, Ethical Consumer Lender of the Year, there you go, and Best AI-Powered Credit Risk and Lending Solutions Provider. There you go. So there's a chance maybe I'm being a little bit unfair on this company, but I just don't like pay advances. I just think it's an horrible thing. I do understand that some people need that if there's a massive emergency, but then if you do provide financial education, people should have this money at the side in case of emergencies. They should always have that, an emergency fund. I think that's probably well taught in any sort of financial school or setting, anything like that. Anyway, so Beforepay, why am I featuring this company in this particular video? One thing I've noticed about Beforepay is they are typically free cash flow positive. Notice receipts are really high, 221.756 million. Now that, and they mentioned this, receipts from customers in the current quarter comprises repayments of customer advances. So keep that in mind. Repayments of customer advances, 204.2 million. Beforepay revenue, 10.3 million, and net movement in other receivables, 7.3. So the vast majority of this is just repayments of customer advances. Now, you can see down the bottom at section 3, 210 million. Wouldn't be surprised if both of those numbers are fairly similar on a quarterly by quarterly basis, because that is payments to customers comprises advances to customers. That is weirdly worded, but again, payments to customers comprises advances to customers. Okay, so advances to customers, that's what that is. Advances to customers. Okay, so it sort of makes sense why receipts from customers and 1.8 would be fairly similar. But overall, operating cash flow positive by $6 million, and that includes interest. So interest and other costs of finance paid only $1 million. I would have thought this company has a fair bit of debt. And we can have a look at the debt in a second. Not much outgoing when it comes to investing and financing activities, apart from repayment of borrowing, $7.5 million. So that's a fair bit. So let's have a look at Section 7. Or before that, cash on hand, $14 million. And let's have a look at debt. So they do have a little bit of debt, $30.9 million, but it's not a lot. I would have thought this company would have had more debt. So that is actually a little bit intriguing when it comes to this company, because they do receive way more receipts. I'd suppose the interest they do collect would be fairly high, because pay advances, you'd probably want to, there's a fair bit of risk in that. So you would assume the interest on that is fairly large. In fact, you could have a look at that in this. Borrow up to $2,000 for a fixed 5% fee with Beforepay. But then maybe there's fees, heaps of fees, late fees and that sort of thing. And maybe they get a lot of money in regards to that. Get cash in your account in as little as 5 minutes. Only up to $2,000. I suppose that's sort of a slight benefit. Anyway, I'm not going to say anything more about the ethicality, if that's a word. It's probably not a word. Ethical nature of this company. I suppose there is a market. And if there is a market, then, hey, they're taking advantage of that market. Okay, so a little bit surprised about the lack of debt. I thought there would have been way more debt for this company, and they don't have to answer question 8. If we have a look at some of their highlights, talking about profitability, the company achieved a quarterly net profit before tax of $2.4 million. So I'd say after tax, probably a little bit lower than that, but they're profitable. A nice increase, revenue up to $10.4 million. So again, if we go back to their explanation of receipts, their revenue was actually $10.3 million. Yeah, it's not $220 million of receipts. It's just the weird thing they do. Anyway, so revenue is actually $10.4 million. Active users, geez. I would have thought that if you need a pay advance, it would just be one-off. You know, got an emergency and just need a one-off. Active users, are there people actively using this? That'd be sure. That's terrible. You know, active users up 12% to 270,000 people. Anyway, debt defaults improved significantly to 0.56%, down from 1.24. Not a lot of defaults, although $2,000. So even if you default, it's not a lot. Operating expenses, balance sheet, maintained a strong balance sheet with an equity balance of $40.3 million. Yeah. So I actually didn't even think about that. So if you go back to the cash, 14 million, debt, what was the debt? 30 million. So net equity, well, I suppose net debt of 16 million. Yeah. So it's a little bit different than what they're saying. What else? Anything else of note here? Debt facility, yeah. Okay, so on Carrington Labs, didn't read anything about Carrington Labs. Personal loans, yes. Anyway, and you could have a look at an overview as well, how the company is increasing, year-on-year change, quarterly change. The only thing going down is net defaults, which is a good thing. So the one thing you want to see going down is actually going down, and the net transaction margin going up. So everything looks positive for this company. Net profit before tax has been increasing as well over the last few quarters. So everything seems to be going well for this company. If you have a look at the cash receipts history, which is not revenue, completely different, this is going up as well. So I suppose that's good, getting more and more business over time. And finally, let's have a look at the chart. So there was a fair bit of interest in this company. Yeah, remember this share price was going bananas back in late 2024. Share price went from 60 cents up to $1.80. So a nice triple bagger for those who participated. Then share price pulled back, and now it's going on another run. And it looks like the share price took off when the company did release their Appendix 4C on the 29th. I'm assuming, yep, the 29th. So the market really liked this Appendix 4C. Share price up 30.7%. I sort of missed that. And the share price has gone sideways since then. Not much selling. So a nice looking chart also for Beforepay. So there is a chance that my bias against this company has kept me from taking a closer look at Beforepay. And the chart looks good, and I should leave my biases out And there you go, Beforepay, maybe a company to put on your watch list if you haven't already. Now on to EZZ Life Sciences. Now this is a company I do own. So I call this a health company. I suppose they provide health products. I'm not the sort of person who'd use any of their health products. So if you have a look at some of their brands, EZZ, what do they do? 50 health and wellness products designed to support and enhance every day. I'm trying to look at some of their products. I'm just going to get some of their products. These are the products I will never use. Yeah. EZZ hair scalp scrub. Maybe I need it, but don't really. Hair growth spray. What else do they have? Yeah, hair protector. Anyway, not the sort of things I would ever use. That's just me. But just because I won't use any of their products doesn't necessarily mean it's not an investable company. That's just me. I don't have to know what a company does. I just have to look at how they're performing. Anyway, so that's EZZ. I've always thought of this company having what's a good way to put it? Being a little bit too overly reliant on China, and I really wanted this company to diversify and sort of move into other areas. And this is something they're actually actively trying to achieve. And you can actually see that when you have a look at the company's Appendix 4C. Now, this company is not as big as you might see when you have a look at some of their financial metrics. Market cap of this company is only 95.76 million, which is, or does make me think this company is actually quite cheap, which is one of the reasons why I haven't completely sold out of EZZ. Originally trading this company, and then when I actually took profits, I went, well, the valuation of this company is suggesting that there is still tremendous upside, but I'm not sure when that upside is going to happen. So I maintain a holding in this company, and then I'll just trade around that holding. So if that makes sense. So let's have a look at their Appendix 4C. I was a little bit disappointed in their March quarter results. I thought it was going to be much better because they have this, I wouldn't say reliance on China, but because the first quarter of the calendar year in China tends to be a lot of chopping, there's a lot of stuff happening in China. They tend to have, this company tended to have a pretty good March quarter, but it was disappointing. They really cut back on marketing and advertising. This company has really high gross margins, and you can see that just by looking at their Appendix 4C and the financial results. And a lot of that money they do make, their gross profit, they put into advertising and marketing. So we can have a look and see if they've started to put more money in advertising and marketing. Happy with this Appendix 4C, I'll have to admit. This company has been operating cash flow and free cash flow positive for many, many quarters. I wouldn't be surprised to see them release an announcement saying the ASX no longer requires this company to release Appendix 4Cs anymore. Anyway, so let's have a look at their Appendix 4C. So receipts, 21.3 million. And we can also have a look at the year to date, $67 million receipts for the year. So we can see that if you divide 67 by 4, we're talking about $16 million a quarter. So $21 million in this quarter was a good quarter. Operating cash flow positive $1.4 million, $4.4 million for the year. So they are operating cash flow and free cash flow positive because they don't spend much money in capital expenditure. So the one thing I do like to have a look at is advertising and marketing. So you can just see that this company has pretty good gross profit margins. In fact, 80%, I believe, which is quite high for this type of company. And they put a lot of that gross profit into advertising and marketing. $36 million for the year, $9.2 million for the quarter. What I'm going to do is just go back to the March quarter because for some reason I can remember that advertising and marketing fell away in this quarter. Now, it could be a bad memory. $7.9 million. So it was a little bit lower than I was expecting. You can see receipts, only $14.6 million, but they're still operating cash flow positive. So even though receipts did drop in this particular quarter, they're still operating cash flow positive. And that's because of product manufacturing and operating costs, only $3.6 million for that particular quarter. In this quarter, that's risen to $8.5 million. Okay, this company has how much cash? A fair bit of cash as well. $20.8 million of cash. So means enterprise value of this company is only $75 million. And no debt, of course. Commentary-wise, can't remember much in commentary. Yeah, that's right. I want to talk about this. So, consumer health through development and distribution of high-quality products via omni-channel models across Australia, New Zealand, China, and the United States and other global markets. That's the one thing I wanted to see here. expanding into the rest of the world. So they mentioned successful launch date of EZZ Day in the United States, entered a new 3-year Southeast Asia distribution agreement, expanded Australian pharmacy, engaged University of Sydney for a 2-year research study on both bone health supplements. In fact, not one single mention of China within the highlight section. Talking about United States market entry, Southeast Asia expansion. So this is exactly what I wanted to see. Talking about Thailand, Vietnam, and Singapore. And it's very healthy for a company to be more diversified instead of just relying on one company. Something about EZZ Liquid Calcium Soft Gel. Again, something I'll never use. That's just me. And yeah, so a pretty good, a good quarter. I'll call it a good quarter for EZZ Life Sciences. Now onto their quarterly receipts history. EZZ. Got to go the right way. There we go. Anyway, so I really like this company during the period from, say, 2022. You can see back in 2021, 2022, receipts of this company were below $5 million. And then all of a sudden, receipts started to grow. There was one little bit of dip in the September quarter, and then receipts just took off towards the end of 2023 and the start of 2024. Got to a record of $23.6 million in the March quarter. Now, you might say there might be a little bit of seasonality to this company just based off those two really good quarters. And then receipts pulled back during the end of 2024 into the March quarter, which was a bit of a surprise again, up to $21.3 million in the last quarter. My one concern here is those record quarters haven't been beaten. That was a year ago. If I just want to see receipts get to a new record. So that's probably the one concern I do have. But the very fact that receipts did rebound in this June quarter was good. Now, if we see a really good quarter in September, if we see September receipts up to, say, $20 million, that would be a really good quarter, in my opinion, for this company. So a fairly important quarter for EZZ. And particularly if we see some momentum overseas in the United States and Southeast Asia. Okay, so let's have a look at the chart for EZZ. So there was a period of time when the share price or the chart for this company looked absolutely amazing. And yeah, you can see the share price just going bananas. This was in 2024. So share price in 2024 went from 50 cents up to a high of $5. So this was a 10-bagger over a fairly short period of time. We're talking about 6 months. This was a 10-bagger, and I was holding through the majority of this period. So EZZ Life Sciences has been a wealth winner for me, and I did take profits. Not maybe at the top, but very near the top. So I sold on this. You can see the rally in the share price in September. I sold at that point, not completely. I maintained a holding just because I thought there was some value in this company, particularly if they kept on growing. Remember, receipts were really growing at that point in time. Share price pulled back, and as the share price moved towards $1, I was thinking, oh, there is some really good value in this company. But the chart looked like it was breaking out back in June, has pulled back, but just continues to pull back. So I expected this little pullback to be not as long as what we've been seeing. We have seen a bit of an increase in volume over the past few months. That's a good sign as well. Anyway, so the chart doesn't look as good as it did back in 2024, but I do think there's some value in EZZ. That is one of the reasons why I still hold some shares in the company. Okay, on to the last company, Advanced Braking Technology. Hands up, who knows what this company does? Well, it's in the name, Advanced Braking Technology, but I could not tell you exactly what they do, except braking technology. In the About section, they do have exactly what they do. Company profile. They talk about a multi-award-winning company. They're Australian-owned OEM, dedicated to developing cutting-edge vehicle safety solutions. That's not what I wanted to speak about. Here it is. Our brake safe range featuring ABTs, a patented sealed integrated braking system, SIBS, is a trusted choice for global underground mining operations. So this is not something you're going to put on your car, I suppose. You might want to, but who knows? Maybe you could. Not only for their unparalleled safety, durability, and performance, our brake-safe SIBS braking systems also eliminates vehicles' emissions by up to 25%. There you go. Established in 1992 in Perth, West Australia. So this company has been around for a while. And I've been following this company for about 14 years. They listed on the ASX in 2002. So they've been a listed entity for 23 years. So sometimes it takes a company to gain momentum. And this is a sort of company that I think has a lot of potential, particularly if they gain more and more momentum. And you only see that when we have a look at the receipts chart. This company is gaining momentum. Okay, so let's have a look at advanced braking activities. It's not ABT, it's ABV. There you go. That's just, I get so annoyed with that. I just like the name, advanced. You just know exactly what this company does. Okay, so this company continually releases Appendix 4Cs that I go, whoa, that's pretty good. But I've never, ever held a position in this company. A market cap of the company right now, I'm assuming it's about 60, 70 million. 37 million. Wow, I'm well off. So this company, only 37 million. There you go. Or shares on issue about 400 million. So right away, I would say underestimating this company. But they do release quite often good quarter results. Not every single quarter, but consistently pretty good quarters. Say 3 out of every 4. Receipts, $6.3 million. Operating cash flow positive, $1.4 million. So if you analyze that, which you should not do, well, if you analyze that, we're talking about operating cash flow of $5.6 million, which makes the valuation of the company quite intriguing. But for the year, $20 million. So this was a good quarter just based off the year to date. And operating cash flow positive, only $604,000 for the year. So this could have been a one-off good quarter, or this could be just the momentum of the company showing through in the financials. Free cash flow positive as well for the quarter, also for the year. What else? Anything of note here? Cash on hand, $2.9 million. Not a lot of debt, $310,000 of debt, and they do have some unused financing facilities. Anyway, and also we'll have a look at the highlights section, talking about revenue, $5.6 million for the years or for the quarter, which was a little bit lower than cash receipts. So you always see cash receipts and revenue be a little bit different because of timing, but still 27% higher than the previous corresponding period, which was Q4 financial year 25. Revenue for the year. So now we have yearly data as well. Profit for the year, $1.78 million. Not higher, much higher from the previous corresponding period, but they are profitable. Underlying profit, 1.08, up 87%. Continuing development milestones for brake IQ and autonomous brake technologies. There you go. Autonomous brake technologies. That could be exciting for the company. Well, they mentioned Sub-Saharan Africa. During the financial year 25, ABT expanded its installed base in PNG, Mali, Burkina Faso, and broader Sub-Saharan Africa. Interesting. Okay, now on to cash receipts history. Yes, cash receipts history. I was almost about to forget that bit. And this is a cash receipts history that is something I'm looking for. This is exactly what I'm looking for. We'll get rid of you. Now, it goes back a long time. And when I say a long time, I mean a long time. I've been following this company for well over, in fact, I just got to decrease the size of that. So I've been following this company since, well, I started doing Appendix 4C looking at. So this was back in 2013. And between 2013 and I'll say 2019, not much momentum in the business. Receipts really going sideways. But we have definitely seen receipts starting to move upwards. A beautiful upward trend in receipts. Of course, it's not going up in a straight line. Nothing goes up in a straight line, but we continually see record quarters for this company. 6.3 was a record quarter, 5.5 record quarter in the December, and then 4.4, 4.2, 4.1, 3.5, 3. So we continually see record quarters, but typically after record quarter, we will see receipts drop a little bit. So it'd be really good if this company had a couple of record quarters in a row. That'd be really good. But there's definitely an upward trend in receipts for ABT technology, braking technology. So yeah, this is exactly the sort of thing I'm looking for. And there's a chance that this company has really hit that inflection point, and they could actually exponentially, maybe not. I'm going to say they could exponentially grow from here, but that could definitely increase their growth from here. So let's have a look at the chart and this chart's going to look good, I think. ABV. This chart definitely came onto my radar a while ago. If you have a look at the weekly chart, you'll have a look at the weekly chart first. The weekly chart looks pretty good. So it's been looking good since about 2019. There's a massive jump in share price in a week back in June. But before that, share price or the chart just looks like nothing, really, doesn't it? Nothing. So really, I'd say maybe this company became profitable a few years ago, and really the chart's starting to look really good. So the weekly chart looks good. Share price recently in the past week got to a long-term high, and looks like the share price bounced off the Appendix 4C. In fact, they released it on the 29th. The day before they released it, share price actually dropped to 7.3 cents. Imagine selling the day before they released their Appendix 4C at 7.3 cents, and then a few days later, share price has rebounded to 9.3. And someone did that. Someone did that. They're probably becoming bored. They probably bought sometime, and they're becoming bored because the share price looks like it's going sideways, and then all of a sudden, share price got to new all-time high. Maybe not all-time high, but long-term high. So actually, you could say the share price broke out during the week. That breakout level was 9 cents. You can see the share price getting 9 cents. 1, 2, 3, 4, 5, 6, 7 times, and failing to pull through, and all of a sudden it broke out during the week. Anyway, so ABV or ABT, Advanced Braking Technology, things looking good for this company. And still, I don't have a position. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.